Hello, welcome to this week's Market Outlook webinar. If you're watching the recorded version of this, it's held live on Wednesday, the 25th of January at 12:30 in the afternoon. So this is a webinar that I do every week in conjunction with Aondo. It normally runs for about 30 minutes, and we look at a mix of different markets. We'll have a look at some FX markets and currencies, some of the indices, the DAX, Dow, FTSE, S&P, and some commodities, see what the price of gold and oil is up to. And like I say, we do this every week. Also, a couple of times a month, I do a webinar on social trading with Aondo, where you can copy other traders, and that's something I've got more and more into over the last few months. So they're held at normally 7:30 in the evening, and I think the next one is next Tuesday night at 7:30. And as usual, if you can't make it, there's always a recording you can watch. But let's get started. But before we get started, I just have to do a quick word from our sponsors. Hold on a second, if I can find the right screen. Here we go. So Aondo are running a social trading championship. So Aondo, you can trade, sort of self-directed trading, make your own decisions. But what they're really big in is in social trading, where you follow other traders. So they're doing the social trading championship. So if you fancy yourself as something of a top trader that other people could follow, they're doing this competition. So if I click on here, there's a prize of up to £250,000 for the best performer. So to find out more about this, of course, it's all free to enter, all the usual stuff. If you go to next-trading-star.com, then all the details are there. Okay, so that's Aondo's Social Trading Championship. Let's get into the markets. I think there's only one market to start with today, and that is the pound against the US dollar. Of course, Brexit is the main story in town. We had the Supreme Court ruling yesterday, which went pretty much as expected. It's been an interesting couple of weeks. I'll talk about some of the trades I've done on the pound, because I was the wrong way around the other weekend on the pound. I'll talk a bit about this, but let's just look at the big picture for a moment. This is the daily chart we're looking at, and this is Aondo's trading platform, Trade Hub. So clearly that's the Brexit move, the 23rd of June referendum move. Market looked like it's stabilising, fell off a cliff, had the flash crash, and then the beginning of this year, I thought, well, we've seen the worst. We've seen pound against the dollar. We've seen the worst, and the story is going to be these old lows ahead of 120 are going to hold, and the market's going to bounce back. So a week last Friday, I did this trade. It was late in the day. It's Friday the 13th. Always a good day to do a trade on, Friday the 13th. But what happened was that the day before, the market, pound against the dollar, had been tailing off, and then it broke out through the highs. And those of you who've been on these webinars before, you will know how much importance I place on if a market breaks through the high of a previous day or breaks through the low of a previous day. To me, it's the sign of a change in short-term sentiment. So sort of the 11th and 12th, the market broken out. And on the 13th, it sold off a bit. But I thought, well, it's just a pullback. So I ended up getting filled at a really good price at about, I think it's about 121.28 is where I got filled. Which would have been here actually. It was late on in the day, so 3 o'clock in the afternoon. And by the close of London, the market was trading around about 122. So I was about 80 points, 70 points up on the trade. But because I had a big stop loss, I had a stop loss the other side of 120.40. So I had, for all intents and purposes, a 100-point stop loss, because I thought, well, this is the start of maybe the market marching all the way back up to there. So I was looking for a bigger move. And then over the weekend, but I was quite happy, 80 points in profit. That's a nice little buffer. Then over the weekend, of course, it was the weekend before last. The news came out about Theresa May, I think, going for a hard Brexit. She was doing that speech the following week, and it looked like we were going to have a harder Brexit than maybe everyone had been banking on. And I thought, this isn't going to be too good for my trades on Sunday night when the markets opened. And I was away from that Sunday to the Wednesday. I was in Bulgaria, so I was looking at the markets on the Sunday night, and of course what happened? The market gapped down about 150 points. So it closed at about 122, maybe even more than 150 points. But it opened, I ended up getting filled on my stop loss, I can remember it now, 119.85 was where I got stopped out of the trade, and my stop loss had been at 120.25. So I ended up getting filled 40 points worse than I was expecting. But that is a risk, particularly with something like the pound at the moment, because it is so much driven by news events. So I took a much bigger loss than I was expecting on that, but it wasn't too devastating. It was just a little bit frustrating. But then I think the interesting trade, and one I actually did on the Tuesday, was on the speech. And I'm not, my background is very much technical and charts and all that sort of stuff. So I'm not really a massive fan of trying to trade off fundamentals or trade off news. But it was it Tuesday the 17th, wasn't it? I think when Theresa May was making a speech. So the market had recovered, of course. Without me, I'd been stopped out at a much worse price. But it was around about here when she started talking. And the market had been strong ahead of the speech. And I thought, well, maybe, the market clearly seems to be thinking that actually the news isn't going to be as bad as we thought over the weekend. So it was in this little congestion area here. So I bought in, and I had a stop loss about 50 points away. And as we all know now, when the speech actually happened, it just took off like an absolute rocket. So I managed to make back my loss from the previous trade. And a little bit more on that move there, and since then, and we had the move yesterday. I was tweeting about this yesterday when the result came out, and I think before the result, I was saying, well, is there any way it can go but down now? Considering that it's come so far, it moved 500 points in the last week, pound against the dollar, and we did see a little bit weakness, but again, the market has continued to push higher. So let's just flip it out to an hourly chart to see where we are. So this is the pound. And this is the last few weeks or so. But for me, clearly the trend that we're in is this one here off those lows from last week. So our trend looks something like this. So for me on the pound, even though it is, it's pretty extended, you still want to be a buyer on weakness. And as usual for me, it's all about where's my stop going to go? Where is my stop loss going to go? So if I was looking at some obvious levels, this is a big level, down here, 122.50, and you can see, so it hit 122.50 Jan the 18th, market rallies off, breaks the previous high. This is a trade I should have done really. Comes back to it, previous low holds, and off we go again. So for me, if I really wanted to buy the pound at the moment, and I'm probably not in that much of a hurry to buy, I'd be looking at these sort of obvious levels. So again, the market's 126 is where it's trading now. If it sold off and went back to test those early yesterday, late Monday lows ahead of 124, again, it looks like an interesting level to buy in. But it is, clearly it's very much, a news-driven market. But I think after that initial shock from fearing we're going to go for a really hard Brexit, clearly the market has come round to it. So for my view for the pound this year is still one of recovery, despite the wobble the other week. The next big test is going to be these highs from November ahead of 128, and I think if it can break 128, then we can start looking at a move back in to the 130s. I don't think it's going to get there in the next couple of weeks, particularly because it's come so far over the last week. And if you're a fan of things like RSIs, that is getting a little bit overextended down here. But I think for now, for me, the default position on the pound would definitely be looking to buy into weakness. But let's see, let's see what happens, and let's see what happens if it does start to sell off. We'd expect, first of all, ahead of 124, those levels to hold. And there's quite a few markets that look like this at the moment. We've not done this webinar for a couple of weeks, and in the last couple of weeks we have seen some strong moves in some old favourites like the Aussie dollar, New Zealand dollar, and we'll come to those in a second. But they maybe look just maybe a little bit overextended at the moment. So I think if we had a couple of days of dollar strength, it would push the likes of the Aussie and the pound back a little bit, and it could offer up something of an opportunity. But we'll have a look at those next. Someone's just said, as a general rule, do you try to close trades before the weekend? No, I don't care. I think it is clearly it's risky with the pound at the moment, running stuff over a weekend. But normally I'm not that bothered. I did a dollar yen trade on Friday. I'll talk about that when we look at dollar yen. And I held that over the weekend, and that worked in my favour because the dollar collapsed over the weekend, maybe off the back of something that Mr. Trump tweeted. But no, I don't care about the closing stuff out before the weekend. So that's pound against dollar. Trend still up. It's making a new high even as we speak in the last hour for the current trend. Next big test are going to be those sort of 128 highs from November, December time, but it still looks to be something of a buy on weakness. Let's have a look at an old favorite. I'll talk about some other trades because it's been a bit of a roller coaster month for me in terms of trading. It got off to a terrible, terrible start first week of the month. So I'll talk a little bit about that and about, sticking to your strategy and risk and all that sort of stuff. But let's have a look at Aussie dollar. This is an old favorite. Aussie dollar, US dollar. I think that the story, well, the chart we were looking at last year on this is a longer term chart, Aussie dollar. This is going back to 2008. So it's a big long term chart. But let's just remind ourselves, what we were looking at for much of last year was whether this downtrend was over. So it's a downtrend that had been in place since 2013. So we had a 3-year downtrend in the Aussie dollar, US dollar, and it kept having goes, up at these levels, but could never quite break it out. But when it sold off, it didn't really sell off that hard. And I think that again, the levels to watch, and I'm such a big fan, you don't have to make this stuff complicated. We're looking at the importance of previous major highs and lows. And into December, the Aussie dollar sold off again, but didn't make that much of a dent, or not a dent at all, in these lows, these important lows from May 2016. And you can see once again, 71.45, 71.50. What a great job that did. Now, there was no way of knowing, looking at it back then, that we were going to get this 400-point rally that went almost vertical. But it shows, I think, how these big levels can set up potential low risk but high reward opportunities. Because if we're buying at 72, 72.50 with a stop loss on the side of there, we've got 100 points risk, but potentially if it was going all the way back up here, 600 points profit. And those sort of trades we do all day long. Where we've got that sort of risk rewards. I think that the positive things about this daily chart, we've broken these old highs from back here. Okay, so the market's pushed through sort of 75 and a bit. So that shows some real strength. It's maybe, for the fans of the squiggly lines, it's maybe looking a little bit overcooked, which is, again, is not surprising considering we've had this 400-point rally that's gone nearly vertical. So again, it's one of these markets that the trend is definitely still up. It's, I'd rather buy into a pullback if I could. But of course, the risk is if you sit there waiting for a pullback, you just see the market go higher and higher and higher and higher and higher and higher and higher without you. But I suppose that trend looks something like that, doesn't it? It has, it's losing that trend line now, so it's lost a bit of momentum in the last couple of days or so. But once again, if you really were convinced the Aussie dollar was going to go higher, there are lots of big levels, previous support levels where the market did weaken, but sprung back, where it would be looking to place our stop. So for me, this whole 74.50 to 7,500 area is an important one for the Aussie. So as long as that holds, I'd still be sort of biased, looking for the market to move higher. And it's a similar one. We'll just do this one quickly. But the where's it gone? The New Zealand dollar, US dollar, which is breaking out again. This is a trend. Just to remind ourselves, this broke out of its longer-term downtrend last year. So this moved much before the Aussie dollar. So that had been the downtrend in the New Zealand dollar, US dollar. But you can see it spent from the latter half of 2015 into the summer of last year just recovering. And even though it got knocked back, once again, it's found some strength. So for me, that the bias in New Zealand dollar, US dollar is still up. Once again, it's broken these old highs, which is a positive sign. If we flip it over to the hourlies, there we go. If we take that out a bit, we can see it's pretty clear what our trend is. Let's take it out. If we have that'll do. So you can see, and once again, we've got these various pockets of support holding the market up. So for the story does seem to be still one of US dollar weakness. We are seeing these other currencies pushing higher against the US dollar. Let's have a quick look at the euro, because the euro, again, this is another one where it felt like at the beginning of the year, every man and his dog was really bearish on the euro. I was really surprised, sort of December, Jan time, so mid-December, Jan, that it broke these old lows, and these were really important lows from last year, or even 2015? The 2015 lows. It was such a big level, and I was really surprised. I remember saying on a webinar, I was surprised these lows had gone to the 104.60 lows, because it looked like for much of 2015 that euro dollar was building a base. But it just shows, it's nothing works all the time. The classic move, if a market breaks previous support, is to be a seller, and it spent, these are weekly candles, so it had 1, 2, 3, 4 weeks when it was poking below these important historical lows. But we haven't had the follow through. The market's rejected it. So I think quite a few people, me included, would have been wrong-footed on that. Let's flip it over to the dailies. You could still argue there's still really a downtrend in place for euro dollar on the bigger picture chart. So you'd say it's still vulnerable to turning around and having another look at those lows. And it's going to be an odd year for the euro, because of course we've got the Brexit stuff going on. We've got to negotiate our fantastic deal for dealing with Europe. We've got Mr. Trump saying that everything now is going to be built in America. So there's a whole load of uncertainty out there. But I think for me, if we look on the hourlies, I think the trend for euro dollar is still up. It's been the last couple of days it has struggled, and I suppose you could take the view, if you were bearish on euro dollar, if you thought, okay, this is just a dead cat bounce, then now is the place to go short, because if you're going to go short up here at 107.58, you could put your stop loss above the most recent highs from just a couple of days ago, beginning of the week. So the recent highs 107.73. So I don't know, let's say you had 108 as stop loss, so you've got 40 points risk. Potentially, even if you get a move just down to here, that's a 160-point move. So I suppose if you were bearish on euro dollar, it's a good place to go short. But I don't think I would be just yet, to be perfectly honest, because I think that trend is still up. So it's maybe not quite as clear on euro dollar. We'll take a look at dollar yen, then we'll look at euro sterling, then we'll move away from FX and we'll have a look at some of the stock market indices. So dollar yen, this was it's another trade actually. It's a trade I did on Friday afternoon. And I have not traded this for I don't even know how long, because I missed all of that move in the summer in dollar yen and the subsequent bounce back. So I remember looking at this in the summer on the webinar when the trend was still down. Missed all of that, didn't get involved in that at all. But once again, there was this move. It was it's a really easy setup. So where were we? So it was Friday. What was the date on Friday? It was the 20th, wasn't it? So it was about here. So we had a falling dollar yen. So it looked something like this. So the trend looked like that, let's say. And then on Thursday, the market had punched higher. So we had a bounce back. We'd had a couple of days of strength. But for my money, big levels and all that, it was still, this level, still a big one, 115.63. So on the way down, January 11th, it hadn't managed to break 115.60. January the 13th, I had another look, couldn't do it. January the 19th, couldn't do it. So I thought, well, if there's an area to go short, this is an obvious area to go short. So the trade I did on Friday afternoon to the 20th, so I was short at 115.16 and a stop at, I think, 115.90. So I think a 74-point stop loss. And the market did move a bit lower, I think, because it was on the inauguration speech, wasn't it? I think we did see a bit of pressure on the US dollar, and it was really over the weekend. Once again, we had a bit of an adverse move on the weekend, and on Monday morning, the market was opened 100 points lower, or Sunday night, Monday morning, than where it finished off on Friday. So that is one where holding over the weekend worked in my favour. And you could say, so I'm out of it now, but you could say that the trade now on dollar yen is maybe to play it the other way. We've had this big level from January the 17th, 112.50-ish held, and the market moved to 115.60. So we saw a 300-point rally off this level. This level has held again the last couple of days, and the market has bounced 150 points off that. And we've weakened a bit, but for me, if I think this level is going to hold, this could well be a buying opportunity, looking to buy in somewhere with a stop under this level and a move back up to here. So I think it's an interesting one. I don't think there's, if you're looking at the chart in this time frame, I don't think there's an obvious major trend, but there are some really clear levels, I think, on dollar yen to trade off. If you flip it out to the dailies, I think you could argue that trend is still up. we've got sort of a big support back here. So you could say the more sensible trade is to favour and move back up to 118 eventually. But I think looking on the hourlies, there are, I think, some opportunities there. So let's see how that pans out. So I think that's, for me, that's probably the only immediate one. That's the only one where I think, well, maybe there's a trade there this afternoon. I think everything else is a little bit, well, if the dollar strengthens over the next couple of days, we could get a better entry into things like the pound and the Australian dollar. And just one final one, just to take the dollar out of the equation before we look at stock market indices. Let's have a look at euro sterling, because clearly, again, that's another big mover on all the Brexit stuff, and it's gone a little bit quiet. Euro sterling, you could say, but nothing much has really changed since the 23rd of June referendum. We had the move up, the sharp move up to 86, so a euro worth 86p, then it sells off to about 82.50. But you can see how important this 82.50, 83 area has been. So we've had, since December, a move away again from here. But the market over the last couple of weeks, euro against the pound, has been selling off. So I'd say if you were still of a bullish inclination, thinking the euro is going to outperform the pound this year, if we drift back to these sort of levels, it does look like a buying opportunity. I think if 82.50 breaks, we could see quite a sharp sell-off, famous last words, for the euro against the pound. But for me, I'd still be favouring buying the euro a bit lower down here against the pound. So I think that's an interesting one to watch. So let's see what happens. Pretty boring at the moment, I suppose. I think the action is sort of everywhere else, pound against the dollar. But euro sterling, 82.50, clearly something of a big level. Let's take a look at stock markets. Let me talk a bit about our trading this year. I had the first week of January, I had the worst week that I've had in an awfully long time. One of the things I wanted to do this year was spend more time trading, so cut down a bit on some of the third-party stuff and spend a bit more time trading. And I had a really good sort of November and December, so I came into January full of optimism. And I did 8 trades in the first week of January, and 7 of those were losers. It felt like whatever I did, I couldn't get it right. I'd buy something, it'd go up. I'd reverse a position, I'd go short. I'd buy something, go down, reverse position, go short, and it bounced back up. And that was the story of the first week in Jan. And for me, I think like a lot of people, I track my performance in terms of R, and R is how much I'm willing to risk on every trade. So let's say you had a £5,000 account and you're willing to risk losing 2% on a trade, then your R is 100 quid. Yeah, so you're allowing yourself to risk losing 100 quid on each trade. So my R for the first week of Jan was minus 4.5. So if I was risking 100 quid, I'd lost 450 quid. So and it was because all of these trades kept going wrong. So I took a bit of a step back over that weekend because it'd been such a bad start, and I realised what I've been doing, which I think is something we're all guilty of now and again, is looking for reasons to do a trade. Because I didn't have much else going on that first week, sort of finding reasons to get involved and maybe doing trades that weren't there. And I reckon that probably at least half of the trades that I did, half the trades I did the first week of Jan, I wouldn't do now, because they were just trading for the sake of it. And I think it's something we're all guilty of. And I think that's where, if you keep a record of your trades and print out charts or paste them into a document or something, it can add a lot when you go back and look at them and think, would I actually do this now in the cold light of day? And then since then, it's gone perfectly fine. I've had 3 winning weeks since then. So for the month, if I closed it, I've got 1 trade at the moment open, Euro Yen. So I bought Euro Yen day before yesterday. And if I closed that now, I'd end the month up about 2.5 R. So I'll be positive for the month. So, but after a dreadful start, things have turned around, and it's all about, I think, maybe taking a step back now and again and thinking, am I doing anything different? And I think I definitely was at the beginning of the year. But let's take a look at some of the stock markets. Let's look at the FTSE. I mean, the FTSE is, it's a bit of an anomaly in stock markets recently, because clearly when the pound goes down, the FTSE goes up. So we started the year with quite a bit of pound weakness, and that propelled the FTSE higher. I'm sure you know, you saw the same newspaper headlines I did. You know, it was a record-breaking run for the FTSE, something like, was it 11 or 12 fresh all-time highs on the trot, never seen before. You know, so the FTSE through December and into this year broke out through the old all-time highs from September last year. And I think looking at it, clearly it's still, you know, it's a market that's still strong. It has come off over these last couple of days. Actually, another losing trade of mine from last week was the FTSE when I was buying the dip, and the dip didn't hold. It carried on sliding. But I think over the last couple of days we have seen, you know, a bit of stability creeping in for the FTSE, and we'll have a look at the DAX and the US markets at the moment. But these are strong again. You know, the S&P I think has broken out overnight, and the DAX has broken out today. So I suppose if you're of the view that the FTSE is now going to maybe revert a bit more to type and track these other markets, and the pound may sort of stabilise a bit and stop gaining so much ground, you could take the view that the trend for the FTSE clearly still up. We're going to have another go at those highs. So if we drew, it's a bit of an odd trend. If we drew it off the election lows, presidential election lows, it looks something like that. So you could say, if you were inclined to buy the FTSE, I think you've got, it actually is quite a good setup. Hang on, let's have a look at this. Let's look at this properly. So we could say the weakness off the highs looks something like that. So that's our downtrend off the highs over the last week. So the market's moving lower, lower, lower. Beginning of the week, the market makes another low ahead of 71.25 and then goes sideways yesterday. Today, we've had a bit of a surge on the open. So we've broken the previous day's highs. So that for me is a tick in the box. So the market had been going down, but has managed to break the previous day high. So maybe we're seeing signs of sentiment turning around. So I think if you were, so I think that the FTSE trades, I think this actually is a trade, famous last words, 71.30 is the low from the 23rd, which is Monday. The market's, 71.80 to buy. So if you thought the market was going to recover from here, we've got a couple of 100 points upside from where we are now, and a stop loss. My stop loss, I would want it under here. I don't want to faff about and put it under these levels in case the market just chops around. Another lesson I've learned is to try and have the stop loss at least beyond the previous day's high or low. Picking a stop loss based on where the market's been trading today is something I'm not very good at. So, so I've got maybe stop loss at, I don't know, 71.20. So I've got 60 points risk, but maybe 200 points upside. So for me, that sort of trade makes sense. So I think there you go. That's an interesting one, I think, to watch now. Are we seeing, with what the FTSE's done over the last couple of days, and particularly early this morning with this break, are we seeing the FTSE getting its mojo back and going to have a run back up at those old highs? Let's see. I think that's an interesting one to watch this week, the FTSE. But if we look at the DAX, look at the German market, it's done it already. So the DAX, the stock markets had been quite boring. I think I tweeted out a couple of times that we were seeing, I think the last 6 weeks for the Dow have been the tightest Dow range since, I'm sure it's 1977 or 1997. There's a slight difference there, but it's just for decades. The range we've seen in the Dow has been the tightest for decades, because it's only managed like a 1.5% range every week, you know, up and down. The high to low of the week has only been 1.5%. And you've seen that obviously replicated. This is the DAX, the German market. This is the daily market, the daily candle, sorry. But look at it now. It's breaking out. So we've had a breakout. So as usual, the problem with breakouts is, well, do you just jump on board the breakout straight away? And if you'd have done that on that euro-dollar chart, I clicked the wrong thing, you'd have losing money. Or do you wait for a pullback? It looks like I'm messing this line up here. There we go. So if we say our breakout is there we go. So 11,680, 11,700 was maybe the previous high, and the market has broken out what looks to be a decisive breakout so far. So that is a classic bullish signal. Market's been stuck in a range, and the market has got a bit of move on and broken out. So it does suggest that maybe we're seeing the start of the next leg higher for the DAX. Let's see where the big levels are, because the DAX isn't at all-time highs. There are some hurdles on the way. There we go. So the big level for the DAX is from, is that May 2015? Yeah, it is, isn't it? So the big level is up here. So 12.4, so 700 points away. So, and there are some little pockets of resistance on the way. But for me, that break we've seen on the DAX, if we saw a bit of weakness tomorrow, I'd be a buyer and looking for something somewhere sensible to place a stop. So the DAX looks like it's woken up. If we look at the Dow first of all, then we look at the S&P. And clearly there's an awful lot going on. The Dow is 4 points away from the 20,000 mark. While we're sitting here, we're seeing history being made in the Dow. I think it came within, did it come within less than 0.1 of a point of hitting 20,000? I can't remember. But there we go. So there's the Dow right at the top of its range. So you can buy 20,000 or buy 19,99999 now. But the Dow right at the top of its range. So I think we're in for an interesting session this afternoon. I do think this Dow 20,000 is just cobblers. It's just a number. But if it does show signs of breaking out this range that has trapped it for so long, and we get some decent moves through this 20,000 level, it does suggest that maybe the next leg higher is happening again. So that does build in to the FTSE, the bullish FTSE argument. After the FTSE getting knocked down over the last week, you'd expect the FTSE to get dragged up by all these different markets. Let's have a look at the S&P 500. So this is the broader US stock market. Clearly, these markets don't open for another hour and a half officially, but they're 24-hour markets. And look, there you can see the S&P, even though the Dow is still flirting with those previous highs, the S&P has broken out. So today we've got the S&P and the DAX breaking out of these previous ranges. So that does suggest further gains to come in stock markets. Whether you buy today or you wait, like for me, and try and buy a pullback and hope you get the pullback. It's up to you. But this is classically, it's quite a bullish move. But I would wait. I mean, there's never any rush, is there? If we look at what the market's done since election day, the S&P's up 200 points off those election lows. We've had a 10% move. So if this is the start of the next 10% move higher, it's not going to do it all in a day. So it's but it's going to be interesting one to watch this afternoon. See when they officially open, do we get some actual follow through on these markets? Where's the Dow now? It's come off that level. Where's the FTSE? I'm obsessed with the FTSE now we've looked at that chart. 80, we'd be 5 points in profit already. It's at 85. Okay, let's see. And to wrap things up, the old favourites, oil and gold. Oil, as usual, is just ridiculous market. But if we have a look at, where's my US crude oil gone? Has it rolled over? Has the contract rolled over? I think it has, isn't it? Because I haven't got it there. Let me go back to my watch list a second. I mean, oil is still bullish. We've let's have a look. Let's find the latest contract for oil. Energies, oil. It seems incredible that just a year ago, we were looking at, why is it not coming up? I can't bring it up. We were looking at oil at $26 a barrel. Why is it not working? Oh, we can't see it. Let's have a look at Brent. We're looking at crude oil at $26 a barrel, and today it's above 50. But let's have a look. It's been a pretty quiet week for the price of oil. Let's bring up the Brent March contract. And it's just stuck in a bit of a range, really, the price of oil. But clearly, again, if you really want to trade it, and like I've said on numerous occasions, I don't like trading oil because I just find it really too volatile. But any weakness, back towards, at the moment, sort of 53.5 level seems to be a buying opportunity, and it can't make much progress much beyond 57 March crude oil. But I think the story for this year, one of the stories for this year, is going to be the oil price gaining some ground, and maybe getting up to 60, 65 a barrel at some point as the year goes on. So I think the bias for oil is still definitely up. But let's look at something a bit more interesting. I think is gold. This is another one I've missed. The move we've seen in gold this year. So we had, just to remind ourselves, we did have quite a strong move last year, and then it lost it from the summer. The price of gold just drifted off. But once again, we did see, if we look at, I'm not a massive fan of things like trend lines, but if we were looking at the trend, looking, I don't know, something like that, then we did see, if we zoom in, sort of December, January, it's starting to turn round. And if we flip it over to the hourlies, then the trend on gold is still up. But like a lot of markets, it is looking, can we get any more than that? 4 hours. It is looking arguably a little bit overextended up here, but any weakness still looks like a buying opportunity. We've got pockets of support here, 11.95, down here 11.88, down here 11.77. There's a lot of support below the price of gold. So for me at the moment, any weakness in that gold price still looks to be a buying opportunity, and it's only if we start to lose these levels, 11.75, that we have to worry about a bigger sell-off. But I think for now, the bias for gold is still up. We're still a long way off those sort of summer 2016 highs, and 12.30 looks to be a bit of a hurdle. But I do think, I think another theme for this year will be the recovery in the gold price. But let's see what happens. Again, we're looking for the fans of the squiggly lines. We've got a bit of bearish divergence going on here, where the market's pushed to a high and has pushed higher still, but the RSI is falling away. So this does suggest that maybe it's a little bit tired. I mean, like a lot of markets, because we have had such a strong run up. But I'd be looking, if we did see some weakness over a couple of days, I'd be looking for, when the strength comes back in, to try and jump back in on that trend. So yeah, lots to watch. I think that the immediate one, I think, is that FTSE, is the FTSE in stock markets, because stock markets are breaking out, have broken out overnight. Can they hold on to those gains today? Let's see how today goes for the S&P and the Dow. Can they hang on to those gains? Pound against the dollar, clearly still strong, very much news driven. Maybe it's due a little bit of cooling off after the excitement over the last week and a half with Theresa May's speech, and of course she's meeting Donald Trump, isn't she, on Friday? So that could inject some volatility as well. So that's, I think, an interesting one. And purely off the charts, something like the dollar yen that we looked at, because of these sort of big levels from over the last couple of weeks or so, to see if these, it's been trading in something of a range and sort of playing the range there. But plenty to keep an eye on. But maybe stock markets are the interesting one, to see if we do get these confirmed breakouts. But for now, we'll start wrapping things up. So if you have any questions, there'll be a recording of this available a bit later if you want to sit through it all again. But if you have any questions, drop me an email. So my email address, david@tradeafter.com. I've written a bit about social trading there on though, and I'm going to write a lot more this year. If you go to www.tradeafter.com, it takes you to a page on my website where there's a bit of information there. But no, I think there's plenty to keep an eye on in the days ahead. And as usual, we'll do this all again next Wednesday at 12:30, and then before that, next Tuesday night at 7:30, there's a half-hour webinar on social trading. But we'll wrap things up there. Thanks for coming along again today. I hope you have a good week's trading, and we'll talk next week, hopefully.